Iran returns seized crypto mining equipment to miners. A government body responsible for state property in Iran has released some of the hardware seized from illegal crypto mining farms. Its top executive explained the agency was obliged to do that by courts in the Islamic Republic, where unlicensed miners have been blamed for power shortages. Iran's Organization for Collection and Sale of State-Owned Property (OCSSOP) has started to return to miners some of the mining devices seized in raids on underground crypto farms. It was ordered to do so by Iranian courts.
The consumption ESG narrative for a while. I mean, his comments sort of highlight what I think you agree with, and that is that narrative's here to stay and continues to dominate.
That narrative is indeed here to stay, and you can trace it back going a couple months ago to the NFT situation, and the conversation really starting around then. I think the reality is this is going to drive sentiment here for a while. And the other reality is that retail has arrived back in crypto. The first leg of this rally was primarily institutional driven. When Elon Musk came in at the end of January and tweeted about Bitcoin for the first time, that really changed the dynamic. And as long as retail is in, it's going to be choppy. It's going to be headline driven. And this is the headline right now.
When Musk first tweeted about the concerns he had about energy consumption, some sort of gamed that out and said, well, what's likely going to happen is that Musk is going to come out later with some sort of solution to that problem. And I wonder if you think this tweet from yesterday is sort of the first glimpse of that.
He does love to play the hero, doesn't he? And look, if he can turn out to be the hero in this situation and come up with a better solution that somehow reconciles the environmental concerns with the very necessary energy expenditure that secures the Bitcoin network, I would be fine with that. I think that this is starting to move in that direction with this whole Bitcoin Mining Council announcement between himself and Michael Saylor. I think it's a great direction, actually, for the industry to be driving towards more transparency and more accountability as to where the energy is coming from. But the reality is the incentives are already aligned for miners to be looking for the cheapest sources of energy. And more often than not, that is going to be trapped energy, that is going to be renewables. And, especially as you start to look at a lot of this mining power being moved offshore from China, where there was a lot of coal at play and where a lot of the major concerns around this were coming from.
Jill, I mean, so much of the, excitement among the crypto community around something like Bitcoin is the decentralized nature of it. When you do see something like miners coming together to be more transparent, or the push by the industry right now around regulation and being part of those talks here in the U.S., is there cause for concern that we're actually seeing it become more centralized in a sense?
Yeah, look, this caused a pretty big kerfuffle yesterday. The Bitcoin Mining Council announcement, especially when it comes to miners, who again are the ones who are responsible for the security of the Bitcoin network and for ensuring aspects of it like its immutability and so forth. People get really concerned when they see inklings of collusion. I saw a lot of chatter yesterday around, this is sort of Bitcoin's version of OPEC and so forth. I think that those fears are really misguided and misplaced in this case. All we're talking about here is improved transparency around the energy sources and the energy consumption of these Bitcoin miners. We're not talking about collusion in any other way, shape, or form. It's really just accountability and transparency.
I want to go back to this debate around the idea of digital gold, where Bitcoin is concerned. I mean, J.P. Morgan last week put out a note saying institutional buyers were selling out of Bitcoin and into gold. But I just wonder how you see that debate continuing to take shape, especially if potentially, given some of the inflation fears and chatter, Bitcoin hasn't been outperforming.
Yeah, no, I mean, it's true. Bitcoin kind of straddles this line between both being viewed as an inflation hedge because it has a limited supply. There will only ever be 21 million Bitcoin. And then on the flip side, it's still very much a risk asset. And as of late, anyway, it's been trading much more as a risk asset. I think, again, that goes back to this idea of retail being more heavily involved in crypto than they were maybe 3 or 4 months ago. And when retail is in, Bitcoin trades as a risk asset. When you look at the institutional narratives and theses around it, it tends to trade much more as an inflation hedge. I tend to think that that's actually a positive, that it can cut kind of both ways, regardless of what the macro market is doing here, and especially as eyes remain on the inflation headlines. But it's going to remain choppy as those narratives bandy back and forth, and as these two market forces between retail and institutional also duke it out in terms of where the price action goes.